Okay. Today I marked my 30-minute London high here from the body to the wick. I marked my low here from the body to the wick. And I look for reversals at these areas because they are areas of liquidity. Now, this high probably has less liquidity than this low or these lows because these lows are prominent lows and there's just more resting orders here, which is the fuel for moves like this, right? I promise you, there's a fuck ton of resting orders up here, these prominent highs. But just by the mere fact that it is a London high or low, in this case it's the high in the middle of a downtrend, so it's not a prominent high, but it is a London high, and that's really relevant. That counts for a lot, and you can still trade off that. Not always. Sometimes it's really shitty. It's this tiny little high. You know, maybe if this high was here and it was tiny and we're right next to an actual high, price is probably going to rip past the high to a much more real high where there's more liquidity. So a big move can find fuel. I took it anyway. And it wasn't a bad idea, but the markets have been particularly sensitive the last few days due to the tariffs. The markets have dropped 5% each day for like the last, 2 or 3 days. Regardless if it's dropping or going higher, that amount of movement is just going to make the market I trade a lot more sensitive. Like the amount of movement that's happening here is pretty ridiculous. Like we're making huge moves, especially like crap like this. It's already 12 p.m. and we made 70 pip move and like the later in the afternoon, right? There's still liquidity in the afternoon, but on a normal day, usually the range for a New York session, the entire move from the peak to the lowest point of the day is it's anywhere from 20 or 30 pips, which is kind of low, to 100 pips, which is on the higher end. That's a pretty active day. But usually it's like 40 or 50. And here we have a lot of movement, right? Make 75 pips down, and then 75 pips back up, all the way into the afternoon. It's 4, and now the liquidity is probably dead, but the market's about to close anyway. So I took this trade on this London low. It's not a crazy London high, but I took it anyway. I wanted to lower my standards a little bit, not taking shittier trades, but being more eager to pull the trigger, and that's just not taking any trade. But the reason why I did that is because previously, 2 days ago, we have New York session low, and I don't even know what time it is here. It's nighttime. I don't know. It's like 10 p.m. or some shit here, and price comes down, and it really doesn't stay around here for that long. Like it forms like small, like 3 or 4 pip wicks, and then it runs up like 100 pips. 100, yeah, that's crazy. That's crazy, especially for how much liquidity it grabbed. So the market is extremely sensitive, right? And it didn't grab a ton of liquidity. Like this is a small wick, and it stayed here for a few moments. And the next day was the same thing. This is New York session low on the 30-minute. So was this one. This is what I'm mapping out. These blue squares are 30-minute highs or lows for a session. And then price comes down and it kind of hangs out here, whatever. This doesn't look like it's going to go anywhere. But out of nowhere, we have like a 60 pip move. That's wild. And it really didn't grab that much liquidity. Even if we look at the 30-minute for this move, like this is very unassuming. Like this is not enough conviction for me to make a move. This one looks a lot better. Like this is a really cool rejection. I actually wanted to take this trade, but it didn't work out for me. So I saw this happen. I saw this rejection, and I said, you know what? I'm going to wait for price to come back down one more time to me because I'm not going to enter up here. I'm not going to chase the trade. That's horrible. My goal is to enter as close as possible to the point where the trade would be invalidated. So I want to enter down here because my stop loss is going to be somewhere here. If price closes down here, price totally disrespected this low, and it's not going to have this reaction. So when price rejects like this, I'm not going to jump in here because I would have to put my stop loss here to not risk a ton. But really, the area where the trade is over is down here. So there's a chance I could get stopped out, and then the trade works out anyway. So I'm not going to overextend myself. But anyway, I put a buy stop limit here, and I said, okay, price is going to come back down. This is a big low. Surely it's going to want to come down and grab more liquidity. But that didn't happen. I just did it once, and it ran up here. It's even worse. Well, this looks kind of nice, but this was a quick move, especially for the size. Like, I usually don't see that. And here, like, for this, I wouldn't even have seen anything coming, and still, like, there was a huge move. So that's why, yes, this is not a prominent high, but still, I said, you know what, let me pull the trigger before this trade runs off without me, because the markets have been sensitive. So I take the trade, but something interesting happens. I have a stop loss of about 10 pips. My max is, I don't know, maybe 15 pips. I'm not risking more than that. And that's really all I need to give the trade usually. Most of the time, this is as much drawdown as I'm going to have. I don't know what this is. This is like 7 pips-ish, okay? Sometimes I get stopped out right on the dot. Sometimes I have, stop loss of 15 pips. But the buffer zone, like, this is normally what it is, 15 pips max for me, for the way I trade, from where I enter. It's not a universal thing. 15 pips is my stop loss. No, I enter maximum 15 pips away from where the trade would be invalidated. Okay, so usually if price, right, I'm looking for price to respect this high. So what happens when I see this close this strongly above this high and then do it again? That tells me price doesn't give a fuck about this high. It totally disrespected it. And when I saw this, I thought, damn, we disrespected this. We came back down to retest, and now we're going to go long. And price wants to run up to this liquidity. That's what I thought. But what I failed to realize is that this was actually a rejection on the 30-minute. So we look at the 30-minute, and this is beautiful. This is perfect. This is all I'm looking for. We totally respected this high. And we come up a little higher, whatever. But this is fantastic. And at this point, I already got stopped out, and I stopped looking at the charts. And I really shouldn't have done that. I should have taken into consideration that the market is extremely sensitive nowadays. And there's going to be moves for the whole day, probably. And that's what happened. Like I said earlier, at 12 p.m. onwards, to make a 70 pip move is very atypical. I never see that. But the only reason that's happening is because of the tariffs. And I don't know, the stock markets are going crazy right now. So I kind of checked out, right? This was the 30-minute rejection. And then mind you, it's important to know, at this point, I'm kind of glancing at the charts periodically. But psychologically, like, I checked out. Like, the day's over. I'm not trading anymore. I'm not looking for anything. So I'm not analyzing the charts as closely as I would be had I been looking for a trade. So that's why I missed such a clear signal like that 30-minute rejection here. That screams at you. Instead, I was looking at this. I said, okay, this is good. Okay, we close back down below London high with confidence, and then we do it again. We close below these lows now. Like, now we're back in business. Now things are good. And then with this retrace, I was looking at price, and I'm like, maybe I should get back in. But again, I don't chase trades, right? Because my area of invalidation is somewhere here. So if I enter here, price could come up almost 20 pips, right? But I'd be forced to put my stop loss here. So if I enter here, there's a chance that, yes, the trade will work, but it's going to come up to this much drawdown, stop me out, and then finish making the move. So I'm not going to chase a trade, because if I enter here, I'm overextended. right? And if I set my stop loss here and price comes up to this much drawdown, I'm extremely uncomfortable. Like, I'm in a bad spot, and that's not a trade you should be in if you're ever uncomfortable. Here, like, yeah, I don't want to lose this trade, but I don't really give a shit if I get stopped out. Like, I'm willing to lose this, and I know the trade is over at this point. Today, this wasn't the case. It's a very atypical few days. But anyway, I saw this. I said, okay, price, realistically, it's not going to retrace much higher than this. A lot of times I see retracements come back up to the previous low. It'll stop here. Or, in this case, it should stop at the London high and then come down. Maybe if it was a shitty day and the market wasn't so decisive, maybe it would come up here and consolidate, but it didn't do that. It came down and I missed this. I totally could have caught this on the 30-minute rejection alone, but I was checked out. I wasn't looking for it. Even after that, I said, damn, I missed a trade. I saw this. I'm like, damn, I should have kept paying attention. And still, I stopped watching the markets. And there was another opportunity. These lows here are interacting with New York session lows from the previous day. And on the 30-minute, it is so freaking obvious. Look at this. Huge rejection. It's amazing. Like, I totally would have entered here. It's grabbing liquidity, grabbing liquidity, grabbing liquidity. Sure enough, again, at 12 p.m., huge move. And I missed it. And like, this is all I trade. Like, this is what I look for. I look for price to respect prominent highs and lows or session highs and lows. And I look for rejections. And I missed it. I just, I was kind of checked out of the markets. I wasn't in the mindset that there could be another trade. Keep paying attention. There's a trade to be had here. I said the day's over. But that was a mistake. And, tomorrow I'm going to avoid doing that. I'm going to, take the market seriously the entire day. But this movement is wild. Like, from 8 a.m., even now, it's 4:20 p.m., it's 4:17 p.m. It's even an 8 pip move down. Like, that's a lot. That's a lot for this time of day. But, yeah, I mean, really the only real mistake I made was not looking at the charts for the rest of the day. Because I would have caught these. Like, these jump out at me. But psychologically, I wasn't looking for trades. So that's why I missed them. But this 30-minute wick, that's my bread and butter. These wicks down here, that's my bread and butter. I mean, yesterday I tried to catch this trade, but it just didn't come back down. Again, I wasn't looking at the charts at this point. I don't usually trade at night, okay? But I kind of glanced at the charts. Even so, like, I wouldn't have gone long off this alone. I would have wanted it to come back down and reject again or form stronger rejections. So I put a buy stop here and it didn't come back. Like, this is what I trade. This is what I look for. Sure, this one I would have missed. This one is, I wouldn't have suspected it. Today, this wasn't a prominent high, but in hindsight, there was an awesome rejection and I just didn't see it. Like, when I went to go check, I saw this, but like, I was more so looking at this candle for some reason. And, I don't know, man. Again, it's largely psychological, and I just wasn't looking for it. I wasn't taking the market seriously, as if there was a trade for me to be, for me to take. But never mind. What counts is that I see these things. Like, this isn't just hindsight. Like, I was looking for this long. Here, I missed this. This isn't obvious at all. Today, I was looking for this short. It just didn't happen how I wanted it to. Price overextended by 20 pips, which is a fuck ton. Price does not usually do that. But that was kind of a fluke. Usually you don't have to give it 25 pips of buffer to breathe. It's way too much. I'm not doing that. I'm not willing to risk that much. And price usually is never going to go right from the high, right? If I was trading this high, okay, we'll pick this one. If I was trading this high, ideally, I would like to enter somewhere up here, or maybe here. Because if price closes up here, the trade is probably invalid. But if it runs up for 20 pips, I'm not expecting it to go so high up, because if it closes up here, it's over. Right here on the 30-minute, it didn't close up here, but on the 5-minute, it did. And I just wasn't expecting that. And I just need to keep my eye on all the time frames, and especially in times like this where the markets are so sensitive. I just got to keep my eye on it and just keep looking for trades, because many days there's multiple trades to be taken. But never mind. I'm able to read the market appropriately, and that's what counts. It's just my issue is an execution issue. But I never struggle too much like predicting, okay, should we go long or should we go short? It's just a matter of like when I enter or where my stop loss is at, or how long I'm willing to hold on to the trade. It's more execution oriented. But yeah, tomorrow I'll keep an eye for all the moves after the early morning.